are here away from our family, from our friends, from our parents. We came here with dreams, with expectations to make money. We saw something when we were in India that going abroad will help us gaining something. But at certain point, we always realize what we lost in the way. We lost the touch of our parents. We lost meeting them. We lost so many events. We lost memories. We have lost more than we gained. We are not sure if we are earning enough away from our families and parents and from our country. I'm sure we are at better space, but yes, we always miss our parents. And now this is our family, our friends, our relatives, whoever is here, they are the family, and we have to live with that. Okay. So I hope you're doing good. We have mentioned in the group that today's session is a power pack session. Other than BOM, we will be discussing so many things today. And one of them is this section of the session, which is product training. We recently got to know one of the product which is really very powerful. This product was in the market, still is, I don't know since how long. But as I said, I've been, it's more than 7 years I've been in this industry. No advisors have mentioned this product to us. We knew the product, but when we dived into it, when we got to know the powerful concept it has, then we got to know how powerful it is. That's why we chose this for us, for our families, and for our clients. So let's dive in. Today's product is, as you can see, Children's 360 Insurance. Now, Children's 360, it anyways tells us what does that mean. Oh, the clicker is not working today. Maybe the cell? No, it has the cell, it has the battery. Maybe the wrong section. Let me try. Oh, it is. Okay, so 360. Today's product is powerful also because this belongs to every parent's heart, our children's future. This product is protecting our children in many ways. And this, as it says 360, that means children are protected from all around. Now let's dive in and see how this makes alone unique than other products what we have for the children. So in the agenda, we would be talking about why insurance for children matter. What is this product? Key benefits and features of this product, premium and refund options, an example, and how we support you in High Point. And then question and answer. So you can save your questions for the end of the session. Okay, and we will try to answer as much as we can. So let's start. Let's start with why. Why insurance for children matter? Why do we think children need insurance? Well, first of all, we are saying why insurance matters, but when a child is born, especially in Canada, the very first thing what we think about them, RESP. Why do we think about RESP? Because government is giving certain amount to them, grants and bond to them. We think about RESP, maybe advisors, our insurance agents may have told us about whole life for kids. RESP is very powerful, very important product for children. At the same time, whole life for kids is equally important. Now, this product is a little different, like and different. So, why insurance matters? 4 golden rules. 1, at the young age, we have the ability to lock in low premiums. Second, even when children's health changes in later days, we already have built insurability for them. Third, we have developed a habit of saving. whether as a parents or later we're going to give this insurance to children, they develop the habit of saving. Then in very early years, we are giving them the protection from any critical illness. And at the early age, the protection matters, but the premiums matter too. So at very young age, we have protected our children and also saved the money. Now, let's talk the product itself. Children's 360 insurance. As I said, it is protecting our children from 360 angles. It has the amounts from 10,000 to 50,000 in this product. Available term they have is T75. They have options, which is additional life's first event, or we have some additional options, we say plus options. We have 37 critical illnesses covered under this protection, under this product. If you have heard about any insurance industry, when adults are covered for CI, either 25 or 26, in the children, this very product is covering 37 critical illnesses. Just 15 eligibility questions and it tells you if your child is eligible or not. It's not a big application process or nothing. And very important, two very important things: one, guaranteed price until the age of 75, and return of premium option. Now, how these two are important, we will be covering in the upcoming slides. Now, 37 critical illnesses which are covered are here. We have 7 childhood critical illnesses. We have autism, cerebral palsy, we have congenital heart disease and all, including diabetes. Then we have other critical illnesses, but we also have partial payout critical illnesses, including these 37 critical illnesses covered for our children. If you want, I will share this screenshot in the High Point Financial group, so it's easy accessible for you. But when we go to next slides, you might not need it, but I will still share. Okay. Now, what makes Children's 360 insurance stand out? One, return of premium that does not terminate the product, the policy. Single premium, regardless of age, regardless of gender, or if the health changes. Online application, we don't have to sit for an hour to do the application. We don't have to see or contact anyone if our child is eligible or not. 15 simple questions with radio buttons: yes, no, done, application submitted. Instant issue and no medical exam. So this is what makes this product stand out in other, among or many other products that are available for our children. Okay. Now, this is the eligibility. 15 questions out of 15. We have 4 very basic questions. You don't need to take note. When we start the application, these will be there. So simply, are you the mother, father? Does the child be insured reside? If the child is staying with you, was the child born in Canada? If not, then they have the option. So yes, very basic eligibility questions, nothing very broad that you can't answer. Okay, before we move ahead, I want to show you very important aspect that we talked about in slide 3, return of premium. Although we'll be describing return of premium in the coming slides, but I want to show what you did here. I will take okay, sorry. Seriously. This is very short video, maybe a few seconds, and then we will go from there. So when we say return of premium, we all know what is return of premium, right? In this product, we have to choose, when we are applying for the product for children, we have to choose if we are okay for the return of premium option.
benefit returns a percentage of the paid premiums. The benefit includes 3 refunds: 75% refunds at each of years 15 and 30, and a 100% refund of remaining premium at age 75 when the coverage ends. For example, you purchase Children 360 insurance with the premium refund benefit for your 3-year-old child. After the first 15 years, your child remains healthy and you receive no claim benefits. You or the policyholder will receive a 75% refund of all premiums paid to this date. Another 15 years pass, health remains good, and no claim benefits have been paid. You or the policyholder will receive a 75% refund of premiums paid since the last refund. When coverage ends at age 75 without any claim benefits paid, you or the policyholder will receive a 100% refund for premiums paid since the last refund. Ask your advisor about adding the premium refund benefit. It pays to stay healthy.
Okay. So we understood, right, what is the return of premium, and you understood how does this work? Yes. So return of premium, when we talk about, oh, sorry, not this one. When we talk about return of premium, doesn't matter what age of the child is, when we apply the product, the child has to be under 15. The day we apply, exactly after 15 years, only if there is no claim has been put in, you will get 75% of the premium. That is close to $15,000. Again, next 15 years, that means year anniversary of the policy submitted, 30th anniversary, you will get another almost 15,000 check at your home, and child can use it for anything. You can use that for child's college or whatever. Nobody's going to ask what are you using it for. And 75 is the anniversary of the policy. When the policy will end, you will get 100% of the premium back, and that's the time when the policy ends. That's the return of premium in this product. Now I would like to show you how the calculator works. Megha, where is Megha? Megha, can you share the link at the High Point group? It's done? Okay. So if you have seen I have shared this link with you. You don't have to do it right now, but you don't need a login to work on this calculator. This is the premium, return of the premium. Anybody can use it without login. This is the calculator. Now I will show you how this works. Complete name, doesn't matter, ABC. Now what is the age? Let's say my daughter's age is 10. Now coverage minimum is 10,000. Maximum coverage is 50,000. If we don't choose anything else, only critical illness, the premium is $26 per month. If we select critical illness or life payable at the first event, the premium only is $33. After this, I'm talking about when we select everything the product have. Additional life insurance, additional protection to critical illness insurance or life, that's the rider. If we select it, the premium reaches up to $43 per month, and this is without return of premium. When we select 43, some parents can only afford $43. That's totally fine, but they will not get return of premium. They will be paying this until the child reaches at the age of 75. And if we select ROP, return of premium, the premium reaches to $86 per month, and this $86 per month will be forever. When child becomes 18, we always think child is adult, now the premium changes. No, in this case premium will be the same, $86 per month. We submitted the application, this will be for the whole life. Now if you see with ROP, the green selected section, my daughter is 10. When she will turn 25 years old, she will get 11,000 $610. We don't have to remind the company, give our premium back. They will send you the check at home or in the account, that doesn't matter, but you will get this money. Another 15 years, my daughter will turn 40, she will get another 11,000. 75 years old, she will get the whole money back, $36,120. Her premium is paid when no claim is made and the policy lapses. That's the last, that's T75 is the time when policy ends. But the best part is with $86 a month, if the child is young, premium will be, let me see, if the child is just born, let me see, or maybe 1 year. And if you see, they did not even ask if the child is girl or boy. They just went no gender, doesn't matter how old, under the age of 15 the premium will be this. One, I didn't select option plus earlier, $106 per month. Now in $106 I have ROP, I have option plus, which includes compassion, hospitalization, out of Canada medical, accident. So this is combining not only critical illness and insurance, but also hospitalization and accident and compassion. It is also covering critical illness for life, including payable at the first event. So with $106, the child who is only 1 years old at the age of 16, they are getting almost 15,000, 14,310 at the 31, 14 and change, and 75, $55, 55,000. This is the power of this product. The children are not only insured from uncertainties, they are insured for life, they are insured for any events, critical illness, option plus that we say, combined living benefits, the word we use, and ROP. That is the power of this product. One last slide, then we are good for asking the questions. Actually, no, leave it. Yes, so this was everything. And when we discuss this product with our clients, we should understand we are not selling a policy, we are selling peace of mind, we are selling something that's close to parents heart, that is very important for parents, for children, for us. We are selling something that everybody is going to appreciate. We are selling comfort. So every child represents a dream, parents dream, and we are here to protect and preserve their dream. We are here to help the community with the best we can. So this product, I'm pretty sure if you understood this product, this is very powerful and this will help many parents. And the plus point, as I said, if nothing happens to child, God forbids anything happens to child, nothing should, parents are anyways getting the money back. Okay, now any questions?
Quick question. What exactly does compassion cover?
Compassion is when somebody is visiting the hospital, let's say, at that time, or we are getting home care. At that time, this policy is covering that. That this policy can cover when you go to hospital, let's say side bed or parking, something, those type of things.
Thank you.
Yes.
Normally hospitalization is covered under OA.
Mm-hmm.
What does that hospitalization mean?
Hospitalization, everything is not covered. In hospitalization, maybe the surgery is covered. If the child needs an equipment, that's not covered. Let's say my daughter is hearing impaired, she was operated in here, surgery was free, but the equipment she has in both ears, that was warranted only for 6 months. If I have to replace that after that 6 months, or I have to replace any other, like batteries, maybe the wire, maybe anything, I have to pay. Including, as I said, when there is hospitalization, then somebody is visiting you. When somebody is visiting you, you are not allowed to stay in the hospital. That's why they said, if you want to stay, take your child home. They only observe the child or anyone until they are out of the that what do we call that, Sorry? No, no. When they are out of, जब बेहोश करते हैं, what do we say that? Anesthesia. When they are out of anesthesia. Oh my, I lost the word. So yes, when the child or anybody is out of anesthesia, they observe it. Okay, after anesthesia, they are able to walk. Okay, go home. We need the bed for next patient. But if the child has to stay, of course, parents have to stay. They hardly allow. When my daughter was operated, they sent us home at 12 midnight because we could not stay. So those things are covered in that. Side bed, hospital care, extended time if you have to stay in the hospital, somebody is visiting you, hospital's parking ticket, so and so and so many things. So similarly, like in accident also, accident whatever yes due to accident. Yes. So whichever is not covered under OLIP. Yes. That's covered in here. Yes. And the coverage is only up to 50,000. Yes. For now, 10,000 is minimum, 50,000 is maximum, and $106 something that is the lifetime per month premium. It's actually a medical issue. We can say medical, but combination of critical illness, don't plus life plus living benefits. Yes, and don't forget 37 critical illnesses. That's right. Yes, one yeah. Somebody has opted for the return of premium rider. Yep. And in between he takes some claim or something. Yeah. So at the same time, the policy will lapse or it will. Policy won't lapse, but you will not be getting return of premium because you file the claim. Okay. Irrespective of whatever the amount will be. Yes. If it can be less also. Yes. All good. I was expecting one question. Did you want to ask a question, Philip? No. Okay. Okay. I was expecting one question. Nobody asked. And the return of premium is tax free? Whatever the amount we are going to get at like 15, 30 years. I believe so, but I have to check. I forgot to check about return of premium if it is. Yes. It is tax free? Yes. Okay, it is tax free. Yeah. Okay. Sorry, when we pay the premium, so do we get any exemption, tax exemption for the premium? No. No, when we pay the premium, that's not tax exempted. That's why return of premium is tax exempted. Tax free. Yeah. Okay, now the one question I was expecting, what if we are not PR? What if we are not PR, child is not PR or citizen, then what? They should still be covered. So there's a condition like 2 years for the PR. That's right, yes. Yeah, it has to be 2 years. So the child, the parents, of course, have to be permanent, not permanent, resident of Canada. That means if you have stayed in Canada for the last 2 years, eligibility continues. Okay. Yes. Yes, that's right. One question. Yes. Supposedly, if the parents are resident for 2 years and they take this policy. Yep. But before the completion of the term, they have to leave the country. Their work permit expires or anything. So whatever they paid for say 2 years, 3 years, yeah, that all goes in vain. Then that goes in vain because the return. Yeah, the point. Doesn't matter. Even if doesn't matter. It has mentioned that out of Canada too, it is covered. So the policy continues even if you go somewhere, unless you give in writing that I want to cancel the policy, I don't want to pay the premium, then policy cancels. Can I just say something here? Yes. We talked about this. Yeah. In Canada, our insurance boards are so regulated that we allow anybody who leaves to take their insurance policies with them. One of the few countries in Canada. So if somebody has any life insurance policy with us and they leave and they continue to pay their premiums, Canada will honor it and pay it out. That's right. That's the difference we have here in Canada versus a lot of other countries such as the US. I have one more question. Supposedly, and not this is for children, but I don't think so. If I can add it. So supposedly, I take this kind of critical illness policy or accidental coverage, and I'm resident, I'm permanent resident or citizen, and I'm traveling somewhere, and I met with an accident. So 100% worldwide coverage doesn't matter what your policy is in Canada. Okay. And supposedly I'm on work permit and my work permit is expiring. So now they're saying, okay, go back to your country from wherever you come. 100% worldwide coverage as long as you keep your premiums. Yeah.
I have no ties with Canada anymore. 100% of your return, your coverage, as long as you pay your premiums. They will, when the term completes, they will pay me in my country. 100% of everything at any insurance policy in Canada is honored and we pay you.
Yeah, that's why
not in US.
This is not in US. It's only in Canada. Yeah. So yeah, as Philip said, as long as you guys are paying premium, the policy continues. You give 10 days written notice to the company. You don't want to continue the policy, only then it ends. Okay. Yes. All good. All right. Thank you so much, everyone, for bearing with me. You.